Yeah, baby. What is going on, beautiful people of the world? My name is Dave. This is the stock trading analysis that you need if you are a swing or momentum trader. If you're trying to catch those momentum leaders in the market, this is the most beautiful pullback that you're going to see in a very long time. I still believe we're in a secular bull run with just a few percentages in the pullback. We have a lot to cover, a lot to go over. First, go over the question right there. Vote on it. Are you risk on, risk off? You trade any market, or you don't even know what it means? That's A-okay too. Welcome, guys. We have an awesome show. We're going to go over the earnings, what we have coming up, the most anticipated earnings, as you can see right in front of you, for August 4th, which is the next week. It is tomorrow. It's a new month. Let's go. We have Monday through Friday. It is a complete and full list. We're going to get to that very, very soon. And of course, we have our interest rates. A little bit has changed there on our interest rates. That is A-okay. What's up, Jimmy Bright? Good to see you, brother. A little bit of change in those interest rates, but it's still 3. Not to be a spoiler, it's still the 3. It's still the 3, but we have seen some change in that. What's up, Joseph? Good to see you. And then we're going to hit the sector leaders. Now, my main focus of this whole thing, when it comes to the sector leaders, is what is holding up the best during this market pullback. It's so intuitive if we stay focused on the market leaders, but it is 9 o'clock. So let's get it, baby. I see you guys smashing that love emoji. I'm going to send it right back to you. Thank you guys so much. It feels so good to be here, especially with this amazing weather we have, and my wife kicking ass and taking aim on her 5K last night. It was absolutely amazing. I hope you guys are feeling just as good as I am. What's going on? Zamora and Norman Conklin is in the building. I was actually just looking at our members here, and Norman Conklin joined the Market Makers member list 6 months ago. Norman, huge shout out to you. Thank you so much. And also Carl Burr joining 3 months ago and still a very strong member here. And a big shout out to Beef Stewie. He's not with us right now, but he has been an awesome moderator from the very start and an awesome he's up and coming, guys. I absolutely love my boy Beefy Stew. So shout out to all of y'all. And I say we just get right into it, guys, because we have a lot to go over. A lot to go over. Look at this. This is all before the market open on Monday. Right here, Wayfair, Biotech, Anisim. Some of these I'm not seeing, but if we run through this, you'll see we have PLTR, AMD, SMCI, HIMs, QBTS, Celsius, Apps, TTD, Mealy, LLY, Uber, ANET, Shop, Oscar, Sound, PFE, COP, FTNT, FunCat, Rivian, Hut, Tempest, Clove, Elf, Pins. I mean, guys, there's a ton of names on here. Duolingo, Disney, XYZ, Lucid, Fubo, holy crap, UPST. I mean, the list goes on, folks. This is going to be an absolutely crazy week. I feel like I've been saying that every week, but we have been in an amazing uptrend, and now we are running right into our earnings season, and we have seen the likes of Microsoft and Metas and, you know, things pulling back. But what we're going to focus on is what's holding up in the market, what has still held up during this pullback, and we're going to go through all that very, very soon. Just take a look at this, guys. PLTR. It has been one of our liquid leaders. Same thing as HIMS, as it's been chopping around quite a bit, but we need to keep a close eye on these. As you can see, a lot of things were selling off those all-time highs. So just keep a close eye. Monday after the close, I think PLTR, everyone's eyes will be on PLTR, and we're gonna look at a few of those in the next few minutes here. But first, I want to get into the interest rates just so we can cover it really quick. We're going to be quick with it, and then we're going to go over the SPY analysis. I think it's very, very important. Interest rates with Jerome Powell.
Oh, yeah.
All right, guys, so it's really, really simple. We've been using this CME Fed tool for a very, very long time. It's been very, very good to us. You see these changes almost instantly, even with any new data point, whether it's PPI, CPI, interest rates, anything like that. You'll see it here. It evaluates, it gives you a pretty good judgment. The only surprise we ever got was, I believe last year in September, we had a surprise 2 rate cuts, which was pretty interesting. But other than that, it's been pretty damn spot on. You can see here in September, we are looking to cut. So we're in August, so next month, September 17th, 2025, we are looking at an expected 1/4 basis point rate cut. That's 0.25 points being deducted from the overall Fed interest rate, which means in the long run, it's cheaper for people to borrow money, or in general people, but mainly the banks. When banks borrow money, it's cheaper, they can make better deals, they can use more money to make more investments, and so on and so forth. And it carries on and it trickles down into all of our pocketbooks. Now, if we just jump all the way to December, because I want to see what our expected rate is by the end of the year, and you can see here, that's 3 rate cuts. Okay, so we're at, our current rate is 4.25 to 4.50. And you can see here by the end of the year, you can see we have a 0.5% chance of holding that same rate by the end of the year. But if we cut it back 3 basis points, we have a 53% chance of actually being down those 3 rate cuts. So just stay focused on that. We know that we are cutting rates, which makes it easier for people to borrow money, which usually means that more people are going to buy more speculative things like stocks, right? Okay. I'm glad we all can understand that. But it's very, it's important to understand where we're at. To understand where we're at. If they planned on raising interest rates or stalling and it was a surprise, that's what would be scary. So if we understand where the sentiment is, and then all of a sudden we see a piece of news comes out that says, in the notes that they aren't going to cut rates this month, that's going to be a very scary sign for the market. We're going to see it head much, much lower than this. Now, we're going to get right into the SPY. I'm not going to go into all the ETFs because we've seen a pullback in a lot of them, but what I want to focus on here is our levels. So we're going to look at the NASDAQ first, but I want to switch over to the S&P 500. You can see we broke the 21-day moving average. It feels amazing to be risk off. This is why we have rules, folks. When we broke above this 21-day moving average, we started getting pieces in. Once we were in a power trend, as we talk about all the time, once we were in that power trend and we were risk on and in full risk on mode, we caught, let me see, 16% of this move in the overall NASDAQ, in the overall NASDAQ and S&P 500. Okay, we were risk on this whole time. Why? We were above the 21-day moving average. That damn simple. After this huge sell-off, we were, pulling, I continually been pulling my shares off as we continued to trade above the 10-day moving average, and I noticed a lot of my new trades weren't working out. So when we broke this 21-day moving average, we're risk off. I'm waiting for things to set back up. So I was just telling the wife today just how good it feels when the overall market's pulling back and you don't have any money in the market. I'm waiting for the RBRKs, the apps, the hoods, you name it. They're the jobbies, all the stocks that either we were a part of or that we were talking about or we were trying to get good placement in. That's what we're looking for now. So this is the most exciting time. If you got hurt, well, then you need to look at your risk management. You need to ask yourself, okay, on this pullback, why does this hurt me so bad? For me personally, yes, I took some loss. But it was all understood. It was all imagined in my head, and it was all brought to me by risk. I knew exactly if we were to break down and we would pull back through where all my stops would hit and how much equity I was going to lose. So I'm patting myself on the back on this because the little bit that I did lose, I'm still holding up about 70% on my account right now, my P&L. In these past 3 months that we've been risk on, I'm up over 70% now. Okay, so very, very happy with this pullback. And if you're not, you need to just look at your risk management. You need to ask yourself, why did this pullback hurt you so bad? Did you not start getting into the market until we were up in here somewhere? Where was your risk on and your risk off? And that leads right back into the question. Are you risk on? Are you risk off? Do you trade in any market, or do you not even understand what we're asking here on this poll? So let me know what you guys think. Are you risk on? Are you risk off? If you want to comment, please tell me why. No answer is wrong. Everybody trades differently. I'm just risk off because that's how I am as a momentum trader. I'm keeping a keen eye on what's going on in the market, and we have a list for you today to keep a close eye on. Input on Oracle. I'm glad you brought up Oracle. Oracle's actually kicking ass and taking names, and that is in my leader watch list. So if you stick with me, Keith Stone, and I think I've seen you in here before, welcome. We're definitely going to be going over that. So let's just go ahead and run through some of these leaders that have been just bucking the trend and holding up so well. And one of those is the semiconductor. So the semiconductor ETF is still above the 30-day moving average, just under the 21. And you can see SMH looks really, really nice here. Now, there are quite a few stocks in this that not only had earnings, but they are also holding up above that 10-day moving average. Now, let's take a look at our original leader, and still is one of our leaders, and that's NVIDIA. If you guys take a look at NVIDIA here, you'll see it is still just trending right on that 10-day moving average. That's absolutely beautiful there. We also have AMSC. Let me take a little peek, AMSC. And this is why it's really important to know where your earnings are going to be playing, right? You want to know, because now we are waiting for this thing to do what? We got a price earnings gap up, right? And now we're wanting this thing to get nice and tight, form a base, so that way we can play it. Look at these EPS and sales growth, guys. Look at this. This is beautiful. That's what you want to see. That's what you want to see. This is why we're keeping this on our watch list. We're going to keep a very, very close eye on it. Something that was looking very well, but is not as strong now during this pullback, is TSM. Now, of course, it's still wildly up, so TSM still looks good. But if we're looking at what is holding up the greatest, well, AMSC is still holding up the greatest. Let's look at A-Lab, another one that's kind of just ripping higher, but we have earnings here coming out. But, with that pullback still this far above a 10-day moving average, you can see that they don't want to let this stock go. That's a big sign. Now, I'm not going to play it before earnings, obviously, but it's definitely one to keep an eye on. SMCI is another one here that kind of pulled back, but look, above a 10-day moving average, earnings are right around the corner. So be very careful, guys. We got so many earnings coming out there. One that kind of took it on the chin is ARM. Now, ARM was doing really good. I know Yosef was trading ARM for a little while and was kicking ass and taking names. He got a beautiful, beautiful entry. I thought I had it marked down here, maybe here. I thought I had your entry marked on here. It may have been, I think it was right here, actually. It was where you entered this basing breakout on volume. Actually, very beautiful player. I didn't agree with it so much because it was below a 200-day moving average, but regardless, everybody plays different, and he made some money on this. And now look, earnings, this is why, unless you have a cushion and you have sold into some of this push, this earnings, we would let this thing go. But I would have been out of this below the 21-day moving average. Either way, however you trade, but ARM is one of those that did kind of pull back there. Carl Burr, absolutely. We will definitely be going over Reddit. I just want to cover some of our sectors in general right now, some of our sector leaders, if you will. And right now, I'm just trying to get through the semiconductors, and then actually we'll call it good with the semis. But let's go over your hack. Let's go over your CrowdStrikes, your Oracles, your PLTRs, and then we will definitely go over, we will definitely hit Reddit, Carl, for sure. Actually, let's just do Reddit first. Let's do Reddit right now because I'm kind of bubbling up about Reddit, guys. I absolutely love the way, just look right here. The EPS and sales growth. This is what we want to see out of a newer IPO stock. Look, this thing just came out recently, and look at that beautiful trend, right? Now, of course, when we look at this, the first thing I think of when it gapped up and it opened up right here at 180 is that we're right into resistance. And think about this, the market was pulling back at that resistance level, and Reddit just said, I don't give a shit what the hell is going on here? I'm going to continue to head higher. And it absolutely did. It's beautiful. It did amazing. And so this is definitely one of my #1 stocks on my watch list. So Carl Burr, thank you for bringing that up. It absolutely is beautiful. There's a few things that we can do with this to give it a little bit better analysis. Now see, you can see we already had placed that anchored VWAP right here, but kind of useless because we knew we had earnings right here. But you can see it was just hunkering right on that 21-day moving average, trying to push through that anchored VWAP there, and you can see it did, and not only did it, but it did it on volume. Next day, gap up and continued to push higher. Now, I want to see this thing consolidate a little bit, form another base here or something. I cannot play this just way up here. You know, it's too extended from all the moving averages. You know, this is how earnings happens. Now, I wanted to take an opening range breakout on this trade, but with the overall market conditions and the way they were, also me really just focusing on getting flat. I seen the market, the way it opened up that second day. You know, I just wanted to manage my trades and get flat. I wasn't ready to put a new position on, and that's A-okay. But Reddit, 100%, definitely one that you want to keep an eye on. It's absolutely beautiful up here, but I can't just trade it right now. Let's go over Hack, H-A-C-K. This is the ETF for your cybersecurity. Now, this thing just ripped through this 50-day moving average, completely ripped through. I think a lot of it has to do with CrowdStrike and its earnings, since it's very well weighted in Hack. If I remember properly, and you can see it just broke its 50-day moving average. So we don't really care to keep an eye on Crowd at this time. We don't, because Crowd's below a 50-day moving average. But if we go through some of these and we look at like ORCL, just like our boy, was it Keith? Let me take a look. I believe it was Keith. Yeah, Keith Stone said. He also said investing in dominant energy. Okay, yeah, just give me the ticker symbol, dude. There are a few energy stocks out there that we need to go over as well. But yeah, send that in the chat and we'll take a look at it. Here's Oracle though, like you asked for earlier. This thing's just under that 10-day moving average, holding up extremely well compared to the overall market. With an RS rating of 93 and EPS and sales growth, this is definitely a leader in this area. This is the technology services and packaged software. I put it in there with the cybersecurity stuff as well, but you can see just a beautiful uptrend. This is what you want to see. And, you know, if the market starts to turn around, I could see Oracle, you know, really being that ball underwater, you know. So we'll see what happens there. I just want to go over CRWV. You know, I marked these all out and I talked to you guys about these. I talked about, and maybe it's on my other platform. Let me see where I put the line here. Right at 123.80. So let me mark this out for you guys. I called this out in the chat. 123.80 here. And I'm not too fond of, you know, going short or, you know, anything like that. I mean, I loved it. I love to do it. But I'm trying to just focus on my strategy. But this is the same thing as a breakout, rather than this stock doing one of these where it pops up, stays above the 21, gets tighter and tighter and breaks out. Well, this does the exact opposite. It breaks this first area. It breaks down, right? And then it holds this second area. And that second area never makes a new higher low, and it breaks this. I called this out in the chat as a breakdown. Of course, I didn't take any trades on it. I'm just paper trading these breakdowns. I want to get really, really good at these breakdowns, because after these big moves up, you know, it obviously needs to retrace. After you know, expansion, we get contraction, and I want to be a part of that eventually. But you know, I want to get 100 paper trades and get some stats on that, because the breakout strategy, you know, it's undeniably working amazing for me, and I'd like to continue to use that while studying something else, because you know that's the good time. That's a good time in it. Here's PLTR. You can't argue with the EPS and sales growth. You cannot argue with the strength. Still holding that 21-day moving average as it held the last time and has held the majority of its time since the Liberation Day here. So holding very, very well. PLTR still our liquid leader. Let's see. I think Cecil has earnings, doesn't it? I'm not even looking at the right stock. SEZL. And let's keep up on the chat, shall we? What up, Jolene? Good to see you. Good to see you. Ticker is D. Okay, we'll take a look at that. Good to see you guys. Let's take a look at, okay, so here's Cecil. This is just another one. You know, I don't believe in these names, but because I think it's a buy now, pay later. Either way, you can't argue with price action. The earnings are coming up very soon, but keep an eye. Look at that EPS and sales growth. That's what you want to see. Holding the 50-day moving average very well. It's still showing proper risk reward here. If the overall market wants to turn around, this thing is holding up very well considerably with a 99% RS rating. Absolutely beautiful. Well, 14 of you are here. I'm going to sneak in. Please hit that like and subscribe. I'm trying to grow this channel, and that's all I will ask. And hopefully you'll let that seep in and get the old like button. Thank you very much, guys. Appreciate you. All right, let's keep on keeping on with these numbers, baby. Where's my stats? Oh, let's take a look at LIF is another one that I thought was holding up really well, squatting right below that 10-day moving average. So these packaged softwares are not pulling back nearly as hard. I think it's very important to keep a very close eye on these. You know, GDS isn't doing so good anymore. Let's take a look at, see, this is why when we get these pullbacks, so look at Zscaler. Zscaler was a liquid leader, kicking ass, taking names, not saying it can't come back, but when we focus on Zscaler and we look at this thing, we're like, wow, you know, this is where I got liberated, found a bottom, head way up higher, looking ass, kicking butt. Anyway, now it's just below that 50-day moving average. So when we see these big pullbacks like this is why we get out. We're playing these moves higher. We're playing the breakouts. We're exiting some after whatever your process is. Mine is 18 to 20%. And then if it breaks and closes below that 21-day moving average, we still have made a bit of money, right? We still have made a bit of money. So that's why we need to focus on what is pulling back and holding up the best. All right. So I definitely like the what was that? ORCL is probably my favorite, along with PLTR on this. I'm just trying to manage everything properly. But that's definitely, you know, definitely some of the best lookers in that sector there. If I miss one, throw it in the chat, guys. Don't be afraid. Throw it in the chat. Love the chatter in there. Let me know. I ask that all the time. I was gonna say, where are you guys from? But every one of you guys always answer the same damn thing. If you haven't answered yet and you're listening now, I'd love to know where you're from. We have people all across the globe actually in here, not just to mention across our beautiful lands to the north of us in Canada. We got everybody as far as California to Florida. I'm here in the beautiful state of Michigan with some of the most beautiful weather today. It's 69 degrees out right now, no showers, and the lawns are cut. The cars are washed. We're ready for a beautiful, beautiful day. Jolene and Cali, baby. The Cali, baby. But it is just so good to be here. You guys throw it in. You guys throw it in the chat. Let me know. One thing, you know, guys, I've been telling you guys, I've been bearish on gold for so long, and I haven't been fighting it. I've been actually taking some gold trades. If you guys remember ORLA, I was even talking to B. Stewie about this short here, but the short took out everybody at the highs before it shorted, and now it's just squatting down at this base here. But if we look at GLD, gold, I mean, it's still trading in this basing area. You know, it's just basing out. You know, after expansion comes contraction. That's just what it's doing. So I'm not willing to take a trade on gold. It's just not, it's not in my, you know, it's just not in my forte. But there are some gold stocks that are out there that we can take a look at because I think it's important. If we're looking at these stocks, let's look at some of the faster stocks that we have out there when it comes to our gold stocks. And a few of them that I found, one of them was NG. Okay, here's NG. I found this thing was holding up relatively well to the overall pullback. Now the EPS and sales growth are absolutely garbage, but I like this breakout and it's coming back. It's retesting a 21-day moving average and a basing area. So just be really, really careful with this here. I didn't do my research on this. I just pulled this up when I was looking over my stocks. I haven't done any research on this, so just keep that in mind. That's just one of the stocks, but you know, I won't play ORLA anymore after all this chop. We had AGI and AEM. AEM, I believe, is looking like one of the best, I would say. So if we look at gold, the ETF, you'll see that it's, really choppy as AEM here, a little bit slower of a mover at 3%, is just constantly making new higher lows. Now it has formed a cup with handle, and if it breaks out of this area, it definitely could head higher. So just keep an eye on that for the gold. Let's see what else we got. CRDO, yeah, let's take a look at CRDO. CRDO Technology Group, and this thing is absolutely, wow, yeah, CRDO is just holding that 10-day moving average. Earnings is coming out here, let's see, on the 27th of August. So you can see above a 10-day moving average, still trending higher. The overall market pulling back with amazing EPS and sales growth like this. You'll see, wow. Holding a 10-day moving average is absolutely amazing. RS rating of 98%. You can tell the big guys do not want to sell out of this stock. And with a small pullback like we have been having, CRDO might be able to continue higher. So thank you for bringing that up, my G. Yes, and AMD. We did semiconductors already, and I'm so happy you're here. And you brought up AMD. I did not bring up AMD, and I'm so happy you did. AMD is absolutely just killing it, folks. We put this on our ready list somewhere around here, I believe. I can't remember exactly. Haven't found really the best area for me to honestly get in. It's just been on these pushes high, and there's been a lot of stocks like that for me. I just can't find the right area, just sticking with what I am already in. And, it's looking good. You cannot argue with this. And one thing that I like hearing about, oh, I don't want NVIDIA, oh, I don't want SMCI or ARM, I don't want MU or TSM, I don't want all of those. What I want is AMD because it has the biggest room for potential growth. As the rest of them are kind of already priced in, AMD is starting to really show true potential. Look at the EPS growing here, and then the sales growth really, really growing here. And here's a factor right here is earnings. You named it. It ruins everything. And you can see right here, we have earnings right here on the 5th. So it's coming out very, very soon. But you can see people are holding. They're holding, and they're holding strong through the earnings. It's to me, it's a sign. But I still won't play the earnings. But if I was a betting man, I'd say AMD is to go higher after earnings. Unless they come out with a crazy garbage outlook. Yes, let's go through those nuclear stocks. Keystone, thank you so much for bringing up Oklo, OKLO. I actually sold this. This is going to be one of those things where I'm going to look back. I'm going to say, why did I do that? It's always because the EPS and sales growth. If I don't have true want to hold on to this, I won't. And then this thing was failing like the rest of them. And so I wanted to get flat, and I did. At the end of the day, I was kind of kicking myself in the ass for not following my rules on this one because Oklo held, and it held strong, and it's probably showing like one of the strongest stocks in this market. So Keystone, thank you for bringing up Oklo. We're going to talk a little bit about this as we have a cup with handle. We know that energy is needed to help this infrastructure that we want to create in America called AI. We can see that nuclear stocks, wind, energy, solar stocks are all very, very generative. They all are constantly growing. We're constantly using them, and we're constantly trying to grow this infrastructure. So Oklo, absolutely beautiful here. Definitely on an amazing uptrend. You can see where the previous anchored VWAP is here. We can even drag this to the low to see just how low we can go. And you can see it came down, and it looks like it's testing not only the 21, but that anchored VWAP. Of course, we can come a little lower on this stock, but with the RS rating of 99%, you know that this is a market absolute leader here. What's up, B? Stewie oversleeping. He needs a nap from all that damn reading he's doing. By the way, guys, have not read all the way through this, but you need to get this book. Absolutely beautiful. Just like the orange book that I constantly preach and tell you guys to get, this is going to be probably the next orange book. Just the little bit that I've read, some of the YouTube videos that I've watched on it, this is just absolutely amazing. So make sure you get the Trader Lions handbook, Winning Habits. Definitely one that you need to be aware of there with all the leaders. The question is, folks, are you risk on, risk off? Trade in any market, or you don't even know what that means. 33% say that you are risk on right now, and 56% of you say that you are risk off. I'm actually personally risk off, and 11% say you'll trade in any market. That's awesome too. I wish I had the capabilities and the ability to trade in any market, but right now, to stay focused, disciplined, I have to trade in the market conditions that are working for my strategy. So thank you guys for answering that. And looks like we got some Keystone, Virginia Beach. Nice, dude. Very nice. Very, very nice, dude. Jolene, yeah, California. Jolene, when I hear California, I think of your name. I really do. And I got a buddy, Stu, out there. Shout out to you, Stu. If you're watching, shout out to you out there in Cali. That sweet, sweet state of California. I'd love to see the beaches out there one day. That would be so cool. I actually have a Californian Social Security number, actually. I didn't know that. My mom up and left after she had me, and I got a California security number. So I was out there for a short period of time. Out there in the hoods, out there in Cali. What up? Shout out to all my hoods, whatevers out there in Cali, my Cali hoods. All right, I better get away from that subject quick. No, but shout out, man. But yeah, Nuclear's doing really well, and Oklo looks like it's holding up probably the best out of all of the nuclear stocks. We can look at like SMR. You can see SMR just ripped right back below the 21-day moving average. Still intact, still looking good, but if we're looking for relative strength, Oklo definitely has that nail in the coffin. If we look at NNE, another one of our leaders that we are keeping an eye on, below a 50-day moving average. It's something that NNE really likes to do. It really likes to chop around. It likes to play games with your heart, play games with your money, and I don't like to play games like that. That's why I don't play NNE. This is probably why this is here. But, Oklo, focus on Oklo. Let's take a look at some of the other nuclear stocks we have on here as well, folks, because I think it's very important. And I know my G had an awesome list as well, and he was focusing on UUUU, which is energy fuel. This is your uranium, CCJ. Oh, let's look at LEU, guys, or LEU. There we go. So LEU is another huge leader, now cracking that 21-day moving average. We also have earnings coming out very, very soon, so if you're still holding, be careful out there. But yeah, I gotta say, if we look at the overall NLR ETF, you can see it took a nice hit here, just retracing towards that 50-day moving average. But if you look at any stock in the sector, OKLO, the one that we were in, the one that we were holding the longest, right here off of this base, we could just go over this really quick, guys. I took this off this base here, and I sold at 18%. Somewhere right around here, I sold half of my shares, and then we held on to this last half until it pulled back and closed below this 10-day moving average. Technically, it didn't close below the 10-day moving average. On this pullback, I sold somewhere in this area because it was such a harsh pullback. So, technically breaking my rules because it did close above this 10-day moving average. But, I made roughly around, $1,500 on this stock. And to me, that's still, a very, very good amount of money. I'm just trying to get flat in this situation because the overall market was pulling back. I want to be able to refresh, take a deep breath, and really understand what's going on in this overall market. And while we do this, while we pull back in the S&P 500, and I don't know what the hell's going on, and I'm thinking, okay, well, this is just a pullback, right? Because our pullbacks can go up to 10%. We're only at 3%. Guys, 3 to 5% is your average pullback. So this 50-day moving average, we could pull all the way back to that 50-day moving average. So let's just talk about this for a quick second. Let's mark this out, guys. So we're gonna mark this out. So here is our main area of support, right? Our biggest area of support. Our next area of support is gonna be right here where it's touched multiple times and now is touched again. Now, if we want to ask ourselves, well, what is the overall NASDAQ doing right here in this area? Well, it's bouncing. We woke up, right? Okay, the NASDAQ woke up around 6:30 and you can see, look at this bounce. right off that area. So you can see this area is being supported here multiple days, multiple areas. So this is our first line of defense. Then I say our second area is going to be somewhere in here, which would be roughly around that 50-day moving average. So we have areas of support. We still have room to come down. Is it going to come down, tomorrow? I doubt it. I think throughout this week, we even could see, some of this crap going on where, we do something like that. It could be anything. I don't know. I'm going to take it day at a time and trade the damn chart, understand what the overall relative strength is in what sector it is in. That way we can be in front of stocks like Jobby when they happen. Yes, Jobby. Now, I don't agree with the stock because the EPS and sales growth, so it'd be hard for me to hold on to something like this, but we don't argue with price action. And you can see right here, Jobby, you could call this a few different things. You could call this a trend break, but what I personally like much more is this beautiful base that is showing us at 1850. I know B. Stewie loves it. I'm gonna go ahead. While I have you guys on here, I'm just gonna put my alert right here at 1850. So that way I know if we have volume to back this monkey up at 1850, I see volume candle, I will be a part of this. But because I am risk off, it will have to be on very, very small share size, and I'll have to look at the overall market. I'll have to look at this market, and I'll have to say, hey, are we making new higher lows? Are we still above a 50-day moving average? Well, then it's okay. I can try and take a small size in this, but it feels much better to be risk off and wait for my above the 21-day moving average, wait for us to show new higher lows in this market, and then show that Jobby shows, this would be way better, shows something more similar to, let me just show you guys, let me zoom in here. Best case scenario, we do something like this. The earnings is coming out in just a couple of days. It does something like this, comes back, the market starts to turn around, and Jobby bounces off of this. Just saying, that's my best case scenario, and I would love to see it. That way I can wait for the market to turn around, I can be risk on, and then be a part of Jobby, okay? And that's pretty much the only thing that looks good in the aerospace, because if we look at, well, no, I lie, take that back. If we look at like HWM, our leader in aerospace, it's still trying to hold above that 21-day moving average, right? And if we look at, what was it? Is it GE? GE Aerospace? Look how beautiful that is. Much higher. Now let's look at some of the laggers though. BYRN. Look what happened to this stock, right? Let's look at KTOS. KTOS is still holding up very well, very well. Let's look at Rocket Lab here. Rocket Lab has earnings coming out, still holding up very well. So the aerospace is looking very well. Let's look at one that I really liked that has earnings coming out, has broke that 50-day moving average. I really liked this trend break. I didn't get a hold of it, but this trend break right here was beautiful. Huge move up, and that's why I always tell you guys, when you get to near these all-time highs, I always like to take out half, no matter what you're trading. If you haven't made 18%, within this area. So right here would be 18% if you would have played it the way I like to play it, and you would have taken out half your shares here. But if you didn't, and you're playing this 18% doesn't matter. If you get close to these all-time highs, you take out half, move stop up to break even, or use that 10-day moving average. And you can see here, Archer ripping down here. I'm not interested until after earnings, of course. So, but Jobby, number one. Oracle, number one. Reddit, number one. AMD, number one watch. I mean, we have some awesome names out there. Oklo, number one watch. Do you guys agree? Talk to me. What do you guys think? Oh, Beef Stewie says, talking about this piece of shit Jobby. It's a Beef Stewie says, it's amazing that you are talking about this piece of shit Jobby. I know, man. Well, here's the thing, though. Here's the thing. It is a piece of shit. And as long as you trade it knowing what it is, I'm not trading this as a 5-star trade. Why? There's no EPS and sales growth. I'm not trading this as a 5-star trade. Why? Because the overall market conditions tell me I'm not supposed to be trading right now, right? Why am I not trading it right now? The earnings is coming out, right? So I have reasons, and I have an understanding of the stock. But if we got past all of that and we said, hey, this price action in this stock is showing that it is relatively strong to the overall market. It's holding up in these pullbacks, and now we have reasons to trade it because X, Y, and Z in my strategy tells me that this is okay. But I don't agree with the EPS and sales growth. Well, hell with it. I'll take smaller share size, give myself wider risk, and then root for the damn home team. Let's go, right, baby? Let's go, baby. But I'm not going to put all my eggs in one basket like I did Hood. You know, I was in it over 100% of my account, watched that basket very, very closely, then pulled out the majority of my stocks, and then equalized that and spread it into a more diverse sector allocation. And I did that very quickly. Within 2 months, I started diversing, started pulling out. Because I don't want to be all my eggs in one basket, folks. I like more of a 10% in one stock, kind of like Marty Chargin does. So, yeah, Keith, we did talk about Rocket Lab. We could talk about it a little bit more. The main reason why I don't talk about it so much is because the earnings is coming out. So it doesn't matter how pretty this thing looks. It doesn't matter if this thing really breaks this trend tomorrow. I don't want to be a part of it for 2 reasons. One, we just hit a new lower low, right? And so I want to see new higher lows. We have earnings coming out, and after earnings, we don't know which way, this sucker's gonna go. I'd like to say, this baby's gonna head higher, but earnings might make it head lower. It might just trade sideways. The astronauts might just get dizzy. So, I just gotta wait. But, there's no arguing with this thing other than the EPS. Sales growth looks good, but this thing is kicking ass and taking names. It really is. It's got the cup with no handle as it broke out higher, as we've seen many, many times in the overall market. Pushed up higher on volume, pulled back on lighter volume, and now is just awaiting its doom. You want to take a look at Bitcoin? We can look at Bitcoin. Zamora? Of course we can look at Bitcoin. And by the way, B. Stewie, I gave you a shout out in the beginning of the show, so you better go back and listen to the shout out because that's nothing but love from me to you, homie. Also, well, I'll save the bad language for off the screen. You know what I'm gonna say though. Yeah, we'll look at CAT too. Let's look at Bitcoin. So Bitcoin's bouncing off that 50-day moving average, and you can see before we got liberated that it held this 50-day moving average very, very well. And Bitcoin's doing exactly that. Now, we do have resistance now up here, so let's see what's going to happen. I can definitely see Bitcoin basing out now for a while, but we'll see. I want to see that volume coming in. I showed you guys here that volume dry up was looking really, really well. So I'm waiting for a big burst of volume to come in. And the only big burst of volume that we had to come in was to the downside. So we made a little bit off Bitcoin. I'm talking, I made a couple $100 off this Bitcoin. We played this basing breakout here. I gave it as much possible time as I could, but I wasn't gonna hold it on any longer. Like I said, I wanted to get flat, save my capital, save my mental capital, make some money, and that's exactly what I did. So now, if it does come back up here and it breaks this base, I will be in it. And you might say, well, Dave, why don't you just buy it up now? Well, because when the dip keeps on dipping, then you feel like a dip yourself. So I'm waiting for a confirmation of new higher lows on this. So hopefully Bitcoin will pop back up here, show resistance at anchored VWAP or the basing area at the top or your point of control. And then we dip down, make a new higher low, and then eventually rip, baby, rip to the north side. Give you the old rip, tater chip, baby. Oh yeah, baby. But anyway, that's what I think for Bitcoin. I think it's very, very important to keep an eye on Bitcoin. I'm glad, Eagle Voyage, I'm glad you brought up Coin. Because Coin just absolutely took a smack below a 50-day moving average. When I see something like this, I think, hey, it needs time to show me that it's still a leader. So let me just paint a picture perfect. We bounce off this, show new higher lows, and get back up into this area here. But this looks like garbage to me. Why? Because it broke this 50-day moving average. Now, you might say this is the perfect buy opportunity, Dave, and I would say you might be right. But I've tried to do that. I've tried to catch the falling knife. What I will say is here, you got plenty of support down here. You should have plenty of support right here, but we didn't. It cut right through it. So maybe it just bases out. Maybe give it some more time. Show me new higher lows. Coin might look good in the very near future. B. Stewie brought up KRMN, which is also in the aerospace, which is looking really, really tight here as well. No EPS or sales growth really to really give us an idea, but when you get a big burst of volume here and then nobody's selling the stock, it shows whoever put that money into that stock, well, actually that That is actually that's a volume anomaly right there. So I don't really like that. This is obviously a very low float, 78% float in a 104 million share float stock. It's a 6 billion, you know, it's still smaller, but you know, that volume anomaly is pretty yucky. Earnings is coming out very, very soon, but yeah, the old beefy stew is watching KRMN, and maybe you should as well. Let's take a look at CAT, as Keith Stone brought up a little bit ago. CAT, yeah, Caterpillar. Man, you know, I have not been looking at this just because it's such a slow mover. It only moves roughly 1.81%. Earnings is coming out very soon, so be careful with Caterpillar. That will help move the market. You know, it is weighted in some of our markets, but you can see it's just trending up, following the 10-day moving average, looking absolutely phenomenal and holding right before earnings. Yeah. Tesla, so Eagle Voyage, so when it comes to Tesla, you know, this thing's just downtrending. It's got to break this area. It's got to show me EPS and sales growth. I don't like Tesla. It's inside this pinch here, but personally, I think it's breaking down. To me, this looks like a breakdown. Now, I hope I'm wrong for all the Tesla bulls, but there's a lot of people bullish on Tesla here, and Tesla can go to freaking zero for all I know. But I know that they're doing a lot, guys. I really, really want to believe in Tesla. I want to see it go higher. And, you know, this might be a perfect buy opportunity, but with an EPS rate of 61% and EPS and sales growth down, it's got to show me something. It's got to show me something. You know, we made money back here. We made money back here in Tesla. I think we made money right here. Correct me if I'm wrong. Jolene, did we play this basing breakout on Tesla, or was it this one? I can't remember. Either way, folks, this has got a lot of proving for me to do. You can even see I have a stop loss up here where if we would have played this breakdown, my guess is it's going to come down here and retest this basing bottom down here. I truly think it's a possibility. Do I have money on it? No, but I am going to have it on here for a paper trade. So we'll keep an eye on Tesla. Amazon. So Amazon's been actually kicking ass and taking names, but like the likes of Meta, Microsoft, it pulled back hard for that EPS. People are taking profits, you know, even though we have good EPS and sales growth actually, I probably shouldn't say that. Yeah, so they had a surprise. They beat. So even with good news can be bad news sometimes. That's people profit taking. This was all priced in, folks. That's what it shows me. Amazon selling off here, holding that 50-day moving average. Nope, split right through it. So it needs some time now. Now, do I think eventually Amazon will reach new all-time highs? Yes, I do. But as a momentum trader, I'm not a buy and hold kind of trader. I want to make my money, and I want to make it now. You guys remember that? I want my money, and it's my money, and I want it now. It's my money, and I want it now. AMZN, yeah, we can make some money off the stock, but I'm not buying this dip. I'm not going to. You can. I hope it works out for you, but I'm not the dip that keeps on dipping, right? I wait for 3 new higher lows. I wait for a base or a trend breakout, and then we put our money where our mouths are. Please hit that like and subscribe, folks, and consider subscribing. We have 2 members in the building. Thank you so much, Carl Burr, for being a member. Beef Stewie for always being here, except for when you sleep in, to do the moderating. And of course, you know my boy Norman Conklin with the 6 months he's been here. 6 months. 6 months. That's dedication. Thank you guys so much for trusting me with all your time. Let's see what else we got in here. FIG. Let's take a look at FIG. I know it's a newer, recent IPO, so when we look at this on a daily time frame, it's going to look pretty crazy, right? Well, yeah, everybody's talking about FIG. Why? This thing has jumped up to outer space, hitting 70% on its IPO open, and now from its highs has retraced 14%. So still's holding up pretty good. So when we look at a stock like this, we're gonna have to look at more like well, we can't even look at a 4 hour. So let's look at the 1 hour here. Nope. Let's look at the 30-minute. Nope. Let's look at the 5-minute time frame. You bastards. You're gonna make me look at the 5-minute time frame. So if I was just looking at a 5-minute time frame on FIG, okay, the very first thing I want to see is where is the most volatility? And you can see it's right here, right on its very first day. All of its volatility is traded right here on its first day. First and let's say it's second, see, I still think I'm in the daily time frame. Within its first 15 minutes, this thing traded the majority of its thing. So let's use a few tools here to help us understand where we are at. All-time highs, let's take an anchored VWAP. Well, won't you look at that, folks? FIG, taking anchored VWAP from its all-time highs puts us right here. It's respected at 1, 2, 3, 4, and now we are breaking out above the anchored VWAP from its all-time highs. Let's also pull an anchored VWAP on the 5-minute time frame from its all-time lows here. And you can see right here at its all-time lows, it looked like it has been supported once, and we can't really call this support, but you can see it's slowly acting upon it, and it stayed above it. Now we're within this pinch. A lot of people like to call this the anchored VWAP pinch. And you can see here, it didn't even get that tight as it's trying to break out above it. So folks, if we see volume, and we see volume in the morning, and we see volume confirmation above the anchored VWAP, and that is the way you like to trade, yeah, I say go for it. Just make sure you have risk management in mind. So I like this. I like this trade. Below the anchored VWAP, short. Above the anchored VWAP, go long, as long as you have proper risk management. And it is your trade, not my trade. It is your trade. Then go for it, folks. I say go for it. Just make sure you stay safe. This is a rip your face off kind of stock. You can see it's only been out for a couple of days, but it can move 70%. So be careful, folks. So that is your Fig Newton. Eat 'em up, Buttercup. High risk, but KSS talks about short squeeze possibly. So when we talk about short squeeze, let's go to the daily time frame. The only thing where I really get my short squeeze information, and you know, I really don't like looking at stocks like this. Below a 200-day moving average, huge pop, big sell-off. If we look at this on a monthly time frame and we zoom out on this, you can just see this thing just does nothing but sell off. That's what it does. It pops up, sells off, pops up, sells off. So whether it's going to squeeze or not, I don't want to be a part of this. I'm on the wrong side of the trade almost immediately, Keith. So I'm sorry to give you that kind of thing. But it's just kind of my opinion. If we are looking into short squeeze though, I do like using FinViz, even though it's kind of a little late on its data. It can be. That's where I use. It's free. It's what I like to use. So if we do look at KSS and we want to look at that short flow interest, we can just go to FinViz, type in that oh, of course, my screen goes out. It's always something, guys. It's always something, but that's a-okay. We've got through this before, and we're about to call her quits. So do me a favor, guys. If you haven't already, hit that like, hit that subscribe button. Make sure you vote in the poll. We're going to end the poll here very, very soon. But yeah, if you're looking for short interest, we go up here, we do KSS. We scroll down here. It's Kohl's, though, not necessarily garbage. Oh, well, okay. But so you're using Kohl's as a brand name to say, well, it's not garbage. But I'm looking at the stock as in, can I make money on this stock? Not, hey, do I go to Kohl's? Well, I like Kohl's. They got cheap clothing, and I'm a very frugal person. So when you say, it's Kohl's, though, not necessarily garbage, no, I'm going to stand by what I say and say, this is absolutely fucking garbage, dude. And the reason why I say that here, let's go a little bit deeper into it. Let's go to the financials here. And if we look at the total growth revenue, you can see it's starting to deplete here. It's starting to deplete. And if we look at more as an overview, and I need to turn some music back on here. Let's turn on this song. I like this song. You could just see, we're in a downtrend and it's a valuation. Their price performance and their net margins are starting to slow. We're not seeing any growth in this overall stock. We'll just see it right here. Here's your sales growth. This is what drives a company, right? Is sales growth. If you don't have sales growth, you don't have a company. You're going to have to dilute your shareholders in order to make that money to continue to stay afloat. So when I say it's garbage, I say it's not relatively strong compared to the overall market. It doesn't have EPS and sales growth. We're trending down, even on a monthly time frame, daily, monthly, 5-minute, hourly, we're down trending. So no, I really do think Kohl's is a dying stock, and I think it's more of a short than it is anything personally. And Keith actually just said, I love the honesty, bro, thank you. No, I really appreciate you being here. It's only the strong that stay. It really is only the strong that stay a part of this community because we are very honest with each other. And I'm telling you, there's been so many times where a lot of you, like my G, like B Stewie, like Jolene, like Zamora, you guys have called me out on my strategy from time to time and made me really question myself. So I love the honesty. I love the honesty right freaking back. Real recognize real people, and I really, truly, and honestly mean that. You need to be real with yourself because if you're just going to be phony baloney, if you're not going to be transparent with other people and you're not going to be transparent with yourself, then you're going to pull the wool over your eyes and you're just going to keep on losing money. And then when you get that one little win, you're going to say, I'm a great trader, but you don't want to look at any of your other trades where you lost $1,000 to make $100, right? So yeah, I love everybody being honest with me. I'm trying to be honest with other people. The reports are in. Are you risk on? 45% say yes and 45% say no. I love to see that. Very interesting to see. The change, we're usually really one-sided on here. 9% say trade in any market. But regardless, risk management, people. So I want you to stay focused on you and use that risk management. Just keep in mind, folks, we're below a 21-day moving average. I'm risk off, and I feel so good to have $0 in the market right now and know for an absolute fact that I know the market leaders that I need to keep an eye on. And you guys now know too. Thank you guys so much for being here. Do me a favor before you leave, comment in here. Tell me a little something. Give me a little something. I'm not good at these damn questions things. I want to do something stupid like, what's your favorite color? I don't know. What's a good question, folks? Oh, I'm supposed to be a good host. I'm like, what's your, how about this? What, out of these stocks, what is your favorite? We have Reddit. We have HWM. You can name any stock. What is your favorite stock that you are watching, whether we talked about it, whether we haven't talked about it? Let me know what you think is the best stock. Now, me right now, Reddit is one of my #1 watches. I just put that in the chat. But before we take off, throw in the comment. I want to know, what am I missing? What are you watching? Show me some love. Let's spread that love, folks. Make sure you hit that like and subscribe. Throw it in the chat. I'm going to do the outro, and then we're going to call them out. I want to see what you guys got for me. Let's do this, baby. Hey, thank you, Jimmy. I really appreciate you, brother. AMSC, Jimmy Bright's got, yeah, that is a good one to watch. Definitely a leader in that semiconductor sector. MBot, Jolene says, watching that turd ticker. Hey, but I tell you what, I call it a turd ticker, but I love that you guys have done your research. I love that B Stewie is playing it like a fiddle. NVIDIA, Zamora says, it's good to keep an eye on NVIDIA, liquid leader. PSIX, what is that? Hang on, I know we've looked at PSIX before, B Stewie. Yeah, okay, Power Solutions. I wanted to go over tonight First Solar and some of the energy stocks tonight. We definitely are going to keep an eye on those. Of course, we need to keep an eye on all the other down sectors like the healthcare sectors, all that good stuff too. So just so much to go over. NVDL, of course, NVDL, Norman. Heck yeah, dude. Let's do the 2X leverage together, baby. STX, yeah. Let's see. Oh, Seagate Technologies. Oh my gosh, where did this thing come from? Moves 3.29%. I'm going to add that to my watch list right now while I'm talking to you. Got to add this to the watch list right now. Oh, man. That is beautiful. Yeah, thanks for pointing that out, brother. Hell yeah. Night, Jimmy. Oh, TIN is what you're watching? No, that's not what you're watching. I think you've put TIN in the chat a couple of times. STX, Joseph, I'm really going to have to look into that. Zamora, have a nice night. Joseph, have a nice night. Thank you guys so much. Nothing but love from you guys. Nothing but love. Thank you guys for constantly showing up, kicking ass, taking names, and giving me your time. We'll see you guys on the next one. Nothing but love. Thank you, Carl, Norman, Joseph, Zamora, Jimmy. Oh, Eagle, Voyager, Keith Stone, Beef Dewey, my G. Did I miss anybody? Come on, I don't want to miss nobody. I got everybody. Good night, guys. Thank you.